Hey there traders, welcome back for episode 14 from the stockbandit.tv. It's always great to see you here. Now before we get going, I just want to remind you that the full screen viewing option is going to give you the best quality of video, so be sure to click the full screen button in the player. It's right beside the volume control. Alright, so in this day and age there are a ton of ETFs out there to choose from. There are ETFs for gold or for oil or financials. You can find ETFs that track technology sectors, and on the list goes. And there are leveraged ETFs too, and they'll sometimes give you 2 to 3 times the exposure or the movement that the underlying index is going to show, and so that can give you a lot of bang for the buck. But the same old favorites are still among the most liquid vehicles in the overall market, and those are the ETFs which track market indexes like the Qs and the spiders. And really, that's what we're going to take a look at in this video. We're going to talk about some of the ETF pros and cons. You know, they do have some great benefits, but there are some drawbacks to trading ETFs as well. And so I just want to take a look at a few of those in this episode. Now for starters, the well-known ETFs are liquid, and that means minimal slippage and a very competitive market. And that's a good thing. They're also, of course, going to give you instant exposure to the market, which is nice when a move is underway. And that's going to give you some instant exposure whenever you need to jump on board. ETFs also can move slower than many stocks will on a percentage basis, and that means that if you're wrong, you're not going to get hit as badly. One of the biggest problems though with the market tracking ETFs is that they are the market essentially, and so there is really no real leading indicator for them other than watching the futures. But the delay between the futures and these ETFs isn't enough to be able to game it. And so timing is everything in the market. We all know that. And the big ETFs just don't offer very much of a heads up because really they are the market. They're going to move in lockstep with the major averages. And aside from the leverage ETFs, many times you can still find individual stocks which will move more than an index and therefore give you a bigger gain for catching essentially the same move. So sometimes it's kind of a double-edged sword. You trade the ETF and you're wrong, it's going to benefit you. But if you can catch a stock that's going to be moving faster than the underlying index, then it's going to be even better than catching the ETF and being correct. Now for me personally, I really prefer trading individual stocks just because they are more likely to follow the market. And that means if I happen to be a step behind, I can grab a stock and not feel like I'm really having to chase it too far. And having said all this, I do trade ETFs on a regular basis. A lot of the ones that I'll trade will be the Qs or the spiders. Sometimes I'll trade the leverage funds like QLD or SDS, and these are going to move like the market will. Some of the financial ones, you can trade XLF, and you can trade the SKF, and that's one that moves a ton, and it's very liquid as well, averaging over 30 million shares per day. And so there are a whole lot of ETFs out there to choose from. But for me personally, when I'm trading them, sometimes it's because a move is underway and I want to hop on board. And sometimes I feel like I might need a hedge against whatever it is that I happen to be trading. And so on occasion, I might want to be involved in a general group like the banks or the financials. And so I can turn to a stock like SKF and grab some exposure in something like this. And that way I don't have to pick 1 or 2 names that I think are going to really give me the move that I'm looking for. So I will trade the ETFs when they're my best choice for putting some cash to work, but I'm always going to give my attention first to individual stocks, and if they aren't offering much, those individual names, if they're not showing me a whole lot to choose from, and I do feel like a move is underway and I need some exposure, then what I'm going to do is I'm going to turn to the Qs or the spiders or something similar like the leveraged funds in order to be able to participate in that market move. So thanks for watching episode 14. I hope you find it helpful. As always, your comments and questions are welcome, so do feel free to post them below if you'd like. I'll see you back here very soon with another video, but while you wait, trade like a bandit.